Hey everyone, it's Nick with Us versus Herd. If it's your first time here, you like the content, hit subscribe. If you want to get notifications for when we go live or post a video, tap the bell. And if you want to join the UvH fam, links are below to our Discord along with our free options trading group. It's Sunday night. Let's get this. This is a pretty important week in terms of the market. This is where I'm going to be looking for this week, and we're going to see what happens. Obviously, we only know what we know, and we're just going to do our best. And right now, what I'm looking at here is the S&P 500, and right now we're at some key levels, and currently we're a little bit down. Dow's down currently 100 points. The futures did open down like 300 points. They've recovered 200 points, and the S&P was down like 28, and now it's only down 14. As you can see here, Nasdaq's down 37. So they are bouncing back a bit here. We can pull up /ES here. So it's still, as you can see at open, S&P's dropped, and now they're starting to recover, trying to fill that gap here. We'll see what happens. This week, a lot happened on Friday, as you guys know. Pretty much, China put tariffs on the U.S., and then the market started to recover in the early market hours. 1 hour into market open, started to recover. Everything was fine. Then Trump went to Twitter and just kind of had its way, and that was the end. But one of the key things here that I'm looking at here, we've been pretty range bound the last few weeks here. We've been bottoming out around like 28.45, coming back up to like 29.50 area, and just kind of being very range bound. It's really great. Ranges like this, really great for options traders, really great time. People are like, hey, I'm too scared to trade, but range bound is actually very nice trading, very nice options trading. I definitely love trading options on ranges. But as you can see here, S&P's closed at 28.47, and we're getting into dangerous territory where it's going to break trend and possibly visit the lower 2800. So if let's say it was 28 points, we were down like the lower 2800s technically. If you're looking at the futures right now, but this is the S&P's SPX here. So this could, if this starts heading down to like below like 2800, and we keep going lower, we can definitely go lower this week. Not saying that's going to go lower. I mean, we definitely could, and unfortunately, it's probably going to be very news related. We have Trump issuing more tariffs, as he said on Friday, and they have the G20 summit, and then he just had a tweet actually today, was, my stock market gains must be judged from the day after the election, November 9th, 2016, where the market went up big after the win, and because of the win, had my opponent won, crash. So obviously he's pretty dramatic, but Trump loves the market. He watches the market daily. He's keeping an eye on things. He knows what's going on, and he definitely knows that he's the reason, but at the same time, he's not going to be appearing weak to China. I think that he wants to make a deal with China, and he's probably like deep down really wants to make a deal before the 2020 election, because if that goes unresolved and we have all these issues with trade and everything, his opponents are just gonna beat him up, whether he's right or wrong or whatever. I'm not trying to be political here. I'm just stating the facts and kind of the way that I see things. Now, this is very similar back in last October, end of September, last October, we started to feel the impact of this as well, and we were range bound until we broke up. We had some real fear. And I know the stock market's up like 30-40% since Trump was elected, but if we do go into like a recession where the economy stops growing, or there's like a global slowdown, and it might not necessarily start in this country. It could start in other countries and kind of trickle its way over here. We're not going to be, people think that we're in a recession right now. I mean, we might be starting one. You don't really know until things start to kind of fall apart. It's kind of like, there's a lot of people that have failing businesses, but they don't actually go out of business till that one day they can't operate anymore. So in terms of the stock market, sure, we could be feeling some effects, but really, the economy's doing fairly well. the S&Ps were, the stock market's way up. We have room to go, but in times of recession, I've done videos on this before, or stock market crashes. I mean, we just had some drops, not crashes. We had no flash crashes. We've had controlled selling. Now, if there's really panic in the streets, there's really panic, the stock market could give up 30, 40, 50% in a year or two. So the S&P or SPY, some people like to think of that. SPY could literally go from 284 down to like 160, 175. In times of bad times, and people are like, well, that's good and everything like that, but if it's not really, you can make a lot of money going down, right? You can make a lot of money going down. We can make a lot of money going up. We, as option traders, we don't really make money as a staying the same unless you're selling premium and that whole thing. But I personally, I wouldn't wish a recession or economic slowdown on anybody, because people lose their jobs, people get laid off, and it's really, really hard for a lot of people. However, you can't continue to grow. There's got to be some pullback. There's got to be, you can't have a good year every single year. You can't be the greatest you ever been. You got to have some pullback. Your business is going to be growing, and essentially sooner or later you're going to flatten out and decline a couple of years, and then you can go back up. And that's just kind of how the market operates. It resets itself. I mean, we've been on this like 12-year bull run right now, and it's like the longest bull run in history. Last year was negative. Last year, 2018, was a negative year, and I did do my research. I think in the last 50 years, we've only had back-to-back red years 2 times in the last 50 years. Back-to-back red years. So the chances of this year, 2019, being red isn't very good, but it could still happen. I mean, to be red here, we need to come back to like 250. Which is definitely not out of question. If we get a lot of fear in the market, numbers start to go bad. I mean, we've had pretty good earnings so far. Things have been going pretty well. It's all about job reports and trying to figure out what's going to happen next and trying to stay ahead of the curve. But if you're just playing the trend here, you could say, yeah, definitely could go long here. But you always have to keep in mind that there's going to be like a Trump tweet, and right now we're in the middle of this trade war battle, which there's definitely going to be news on, and Trump's trying to, in his eyes, make this right for the American people. Whether it's right or whether it's wrong, who knows? We don't get the full picture. We don't know where the tariffs actually go. We don't know who's making the money or whatever the case is. There's news articles saying, the American people are paying for it and blah, blah, blah. It doesn't really matter at the end of the day in terms of trading. What matters is being aware, like on Friday, being aware. So we had the news, and then we were starting to recover. So one tweet sent the market way down. One tweet put the market down the rest of the day. We had a huge candles, and then we just dropped the rest of the day. So you just got to trade accordingly. When you have a profit, take your profits. You can always get back into the market and re-enter. Take profits, redeploy capital. Take profits, redeploy capital. I say this time and time again, and I say it for myself as well. There were times over the last couple weeks that I've been a little greedy, and I've actually had those turn into losses. So in this type of market, if you're up 30, 40%, take the money, redeploy. Take the money, redeploy. Your account will appreciate it, and you'll have that peace of mind. Personally, for me, in this type of environment, I haven't been swing trading because the risk is very high for it to, if you go short, the risk is it could go back up to like 290 tomorrow. Or the risk is if you go long, I think it's going to bounce here and we open up like 275. So you could say, you could buy a strangle, you can do a lot of different things, and sure you could do that. But I've been more successful just more intraday in this type of an environment. Stocks that I'm looking for at this week, Baba. I traded quite a bit last week, had some pretty good success with it. Was up on earnings. They had good earnings, but I'm realistically looking at like the low 160s or 155 area in here. If we have a bunch of bad China data, this usually just gets clobbered, and the premium is actually not that pricey on it. I've definitely got some cheap options in here in the last couple weeks. Netflix is another one that I've been trading lately. What I find interesting about Netflix, it did close below the 300 area, which is it's been gravitating towards like 300 the last couple of weeks. Every time I hit 300 it bounced up, it came down to 290, bounced back up. So you got to be aware of this area. However, you can see after earnings here, we've just been making lower highs. So being short has paid off, but you got to be careful because those green days, depending on the timing of your options, it really hurts if you to go from like 297 up to 315 just for it to come back down to like 290 area. So just be aware of that. It's a wild one. Tesla's another one that I've been trading lately, and I'm going to continue trading. It's down below 215. It closed at 211. It's had a rough go. Definitely had a rough go this year. I mean, it had a high of 379 and got cut in half and tried to make a recovery and just had bad earnings, and it's going down quick. So same with Netflix. Depending on the timing of your options, be careful. But I'm looking for this to hit like the 200 area and kind of test the 200 area and see what that does here. Let me look at the. Yeah, I mean, under here, realistically, you're looking at the 180 area. Now that's broke below here is kind of what I'm looking at here. So as you can see, it hit 176.99 and then it ripped up to 265, which is amazing. That's why it's also very scary to short Tesla, especially when it's like falling, went from 260 down to 176, then 176 up to 260. So you definitely have to take your gains and just be really careful with it. I mean, it could definitely, as you can see here, rip your face off. But I mean, Tesla's a great stock to trade. I hope they don't go out of business. I hope they do. I hope they do well. But it's one of those stocks you just gotta be careful of. Wind resorts, they're also impacted a lot by China. They get a lot of revenues from China, and this is looking to retest the 104 level. If this breaks down, we could definitely be sub 100 again. So this is definitely in a very dangerous spot. And then NVDA is another one that gets a lot of revenues from China as well, which we made some gains on it last week, and it has not been doing that well. The crypto thing kind of wore off, where the stock was getting pumped, and then it came back down to earth. So, this one was pretty crazy to trade the other day. They tried to rip up on Friday and just went from 170 down to 162.44. So I mean, it was intense. But you got to be careful that these stocks don't bounce back on some sort of strength, whether it's short term or just intraday. Just be careful. Be mindful of the bounce for your positions. That's pretty much what I'm looking at this week. Other things that are going on this week. We do have some earnings, but it's kind of wrapping up. Best Buy, Dollar General's on Thursday. Alta's pretty good. Alta's a pretty good one to sell premium on. Have had some success on that. But other than that, it's kind of wrapping up. We got Box, but HP on Tuesday. So just be mindful. There might be some plays on that, but realistically, we'll probably be playing the S&Ps. We'll probably be playing the Qs, depending on the Trump news. Possibly getting some VIX action going on here. VIX was pretty good. It's getting up here. It could go up in the 24 range. If it goes up back up to the 24 range again, might be looking to short the VIX. Kind of see what happens. Kind of see what happens in the news. That's kind of been the range of it lately. So, at the end of the day, I think Trump is going to want not the stock market to drop. I mean, he wants the stock market to do well, but at the same time, he's got to handle his business and the mess that he's created with China. So just be mindful. It's going to be a wild week. We're going to do our best to stay disciplined, make some money, stay safe, stay green. It's always us first, third.